you're typing the putting up the gold report.
Good morning, everybody. Welcome back to the Opportunistic Trader. It is Monday, November 5th. This is Mike Aronovitz. I'm joined by Vince Lancy. How's it going,
Good
Vince?
morning, Mike. Good morning, everyone.
Larry had a last-minute emergency, and so he is on a flight right now. He's going to be off in about an hour, and he's going to be on with us closer to 10 a.m. Talking about the markets. Vince and I are going to go over what's happening. So, it's Monday morning, and it should be an interesting week, very interesting week ahead. But right now, we're starting S&P's down 1, Nasdaq's down 14, just kind of scanning the markets. Yields, very quiet. Yields up a touch. The futures, the 10-year futures up 4, the bond is up 9, but that's coming off Friday after a good non-farm payroll number. Yields finally got going in the afternoon. So right now the 10-year is at 320, the 30-year is at 344, and the 2-year is at 290. So while not many people are talking about it, the yield market is getting back into play, getting back towards the highs of the year.
Just to interject, Mike, before you move on to the next thing, we have some serious bond issuance coming on this week. So that would affect further yields going forward and possibly have an effect on the dollar. I've got some stats in front of me. We can talk about it later.
We'll get to that. Yeah, we'll get to that in a few. So just going over things right now. The big mover of the day right now. So crude oil's up 25 cents. There's more talk about what's happening with Iran and Iranian sanctions. But right now, crude was lower most of the night. We traded down to 62.52. Now we're back at 63.34, which is up 20 cents. But the big mover, the only thing that really stands out on the screen, nat gas up 8% on the day. We're going to have more talk. Bryn will be chatting, hopefully she's going to come on a little later to talk about what's going on with that. But, we had that breakout above $3. We've had Mark Fisher and Bryn talking about nat gas at length. And, now it's a really significant move. 25 cents when we were moving in about 3-cent ranges for weeks and weeks and weeks. It's what they talked about. Once we get above 3 and once we start moving higher, there's a big chance for a big move. And, an 8% move, significant move. So that's
two
interesting.
Things that Bryn did say, although she's not here for the moment, and I'm sure she'll be able to fill us in. I think it's going to be very important for people to pay attention to what you and Bryn speak about today based on the context of what she has said and based on what you just said. Number one, we noticed, she noticed, and I emphasized it in a private chat with her, that when nat gas sold off, as well as oil when it sold off, there was a lack of bid for puts, which is usually a comment on the market not being bearish, but a comment on spec longs getting out. Number two, she has been going on for weeks on the backwardation in the markets, and as little as an hour ago, she said, notice how the Henry Hub balance of monthly swing is backwardated to December. And I know you don't want to stay on natural gas too long because there's a lot more relevant stuff. You can speak about that with Bryn, but it seems, and Bryn will confirm or deny this based on how the spreads behave, that people that are using natural gas have become just-in-time type of users. Very similar to how Larry talks about with volatility. Why buy 3-month vol when I can buy spot vol? Well, people are buying daily gas. And when the weather snaps, the daily gas is enough. You have to keep rolling it. And so that backwardation is starting to steepen further back. And you are seeing, Henry Hub monthly swing is now backwardated to December, where that's pretty early for that to be happening. Anyway, point being, a weekend ago, Bryn told me and the Twitter community she was running her AC last weekend, and now here we are, natural gas up 7%. So moving on from there.
Yeah, well, Bryn was not scheduled to be on today, but I'm hoping last minute she can get on for a little bit, being it's a 8% mover.
She'll be on. She'll be on. We know where she lives, and she'll be on.
So yeah, that's a standout there. Dollar really not doing a whole lot. Euros at 113.72, pounds at 130. Aussie, everything's plus or minus 10 ticks in G10 for the most part. Dollar MEX is up 0.5%. Dollar Turkey flattish. We're now at 544 in dollar Turkey. Remember when we were talking about that in the 620 range, hovered around there for a while. So Turkey has strengthened a bit over the last month. And are at 543, and volatility has declined there as tensions have decreased. But in general, FX really not doing a whole lot. Looking at the individual names, I'm seeing Apple down 1.75%, which is at 203.86. So that's pretty interesting. The Nasdaq futures are down 20, but with Apple down $1.75, I'm sorry, 1.75%. That's going to be something to keep an eye on. Axios was on HBO talking with President Trump about how he might be looking at antitrust between Facebook, Apple. I'm sorry, it was Facebook, Amazon, and Google potentially, and most zeroed in on Amazon, but no real price movement on that. I mean, Amazon is down $9, but much in line with Nasdaq being a little weaker. So this week, though, a lot of interesting things going on. Obviously, we have the election tomorrow night, and then Thursday we have a Fed meeting. You mentioned a lot of bond issuances, some economic data. It's the last major week of Q3 earnings season. So a lot going on. I think we're off to a slower start to the week because the main event really kicks off tomorrow, I think.
Yes. Yep.
And I think that's the main focus for the week. I guess, do you want to get into a little election talk of? It sounds like the market is pricing in a very good chance of the Democrats taking the House and the Republicans holding the Senate. And I'd say that's what seems to be market expectation. And so we're going to be talking a lot throughout the day with different people about, if that's the case, what's the market reaction? And I'll throw it to you on that. What are you thinking if that's if that's what we see? What do you think the market reaction is?
That's a good question and a tough question. For a person who's not trading hour by hour, I'd say day by day. I think all things being equal, if the market in its current price right now has fully discounted all information out there, all expectations of a split Congress post elections, then you would think, right, based on past behavior, that the stock market discounts what it expects to happen, and usually historically, I think this is important for traders to understand in the age of algorithms, and the election will give us a nice microcosm of that. Markets usually discount events before they happen, and when markets move after events, it's almost always either a surprise in the event or one of those sell the rumor, buy the news, react before the rumor, and then close out for the news. So, for example, what we would like to anticipate, I think, people who are looking for correlations, even correlations that they're not used to, is that the market is discounting right now where it is. The market is discounting a split house, and because there's been movement leading up to the election, meaning violent downward movement for whatever reason, and violent retracement back higher, although not all the way, you could say, well, the market volatility, players in the market have squared up, nervous longs have gotten out, nervous shorts have gotten out, and now, unless we have a surprise, the market should trade flat through the election. Enter algorithm trading, which will help me answer your question directly. You now have a market where people are trading because they have to, not because they want to. And by that, I mean, normally it used to mean people would have positions on and make bets, and then they'd have to trade when news came out because they were playing that sort of coin flip type of thing, more speculative mentality. But I think when the election happens, normally you'd say, there would be a slow, orderly trend or a non-event. But because there are algorithms, because there are incredibly short-term perspective players out there, if Larry trades hour to hour, there are things that trade second to second. We will have movement afterwards. If you're trading on a minute by minute basis going into and after the election, there will be trades. If you're trading on an hour by hour basis, there may be trades to fade. If you're trading on a day by day basis, you might want to just shut up. I mean, think about what happened to gold on election night in 2016. It rallied $30, $40, $50 and then plummeted. These are the type of things that make no sense, as Larry would say. I don't get it, as Larry would say. And what he's really saying is uh, there's no logic even within the logic. An insane person has logic. You may not agree with their logic, but they have logic. The markets have no logic. So to speak directly and semi-ignorantly, I would say, um, if you're a disciplined trader, right, as I like to think I am, you are flat going into the election. If you are an active trader, you love this stuff because you're flat on a day-to-day basis. And the day after the day of the election, you're going to have intraday moves. However, do not beat yourself up because the market rallies 500 points or drops 500 points because of the election, because you had nothing on. Just remember, you're keeping your powder dry because you don't trade coin flips. And if you do trade coin flips, you trade them intraday. So the big move that will come, possibly come, even though it shouldn't, because of some non-surprise surprise. Go ask the pollsters who have no idea what they're doing. Uh, don't beat yourself up on that. Just say, great, 500-point move lower because of the election. That's great. People are hurt. People are making money. I'm going to make money off of people as they square their book up. So I view this as an active trader. You don't want to have a position, and you want to really keep your money tight the day after the election, because you're going to have 2, 3, 4, 5, 6 trades to do. So don't be afraid to lose 1 or 2 trades because you'll have 4 more opportunities. I hope that helps.
Yeah, well, I think similar to what you're saying, I think there's going to be some good volatility around it. The initial reaction based on what happens probably will not be the correct one, but there's going to be a number of
It
trades
will not
throughout
be
the
the
day.
correct one. Correct. Good point.
I mean, it could be, but typically you'll see that the initial reaction is not. And I think, we're also going to get more, people are going to look at, there's going to be a lot of news coming out over tomorrow night and Wednesday about, who voted, what it actually means, and how big whether it be Republicans, Democrats, what sort of trends we're seeing in the voters from everything that's happening. And so it's it is basically the first time that everybody has a chance to kind of vote on what they've seen over the last 2 years of the Trump presidency. So we'll get a lot more information, and based off of that, there could be some market moves. I would think that the more traction the Democrats get, the more sense of gridlock there will be, which is not necessarily great for big business and business over the next 2 years. So that's kind of one of the
That's
thought
true, and those are
processes.
the fundamentals. I absolutely agree with you. Gridlock means less potentially gets done. If you think Trump is good for the world, the U.S.'s infrastructure, that's going to hurt internally. You'll probably see some sector rotations, right? You'll see if there's gridlock, then there's less reason to own infrastructure stocks. Maybe there'll be less debt issuance. Yeah, these are all macro issues that midterms do matter about. I agree.
Yeah, and right now, another big event for the week, Mnuchin and Pompeo are holding a news conference right now talking about the Iranian sanctions, and Pompeo is saying, anybody who defies the sanctions, there will be consequences. Initially talking tough on everything. So that's definitely going to be something to keep an eye on. Keep an eye on crude oil. Similarly, I think crude oil is a bit in play with this election. Larry was talking about it. He's long crude right now from about this level, about 20 cents higher than here. He's long. One of his thoughts is that, for the election, Trump's been trying to kind of keep crude oil on the lower side, helping the election.
I agree.
Things like that. So that'll be an interesting one. And then also, though, non-election related is this Iran sanctions. So we'll see what happens with that. He says we will penalize those who defy the sanctions. That's one of the headlines here.
I agree. A comment about crude, especially also in context of natural gas. All right. Speaking in conjecture, speaking as a trader who hasn't read the tape but who has seen the patterns before. First, to Larry's point about buying crude because he thinks crude may have been oversupplied going into the election. That's pretty much true. Although I wasn't there to witness it. Frequently, the United States and the Saudis, look, Saudi Arabia wouldn't last 5 minutes, this is my opinion, without United States arms. And so as long as, even though they may be gravitating towards Chinese oil, Chinese trade for oil, selling their oil, they're not going to turn their backs on the U.S. We are their stability, whether other Muslim nations want to admit it or not. Secondly, to that, I'll give you a true story. We went into Iraq one, and oil was called like $5 or $6 higher, which was big, at $29 or something. And then when the market opened, it opened lower, and that was because the spigots were turned on. We were coming into rescue. We were coming into basically, it was a war of aggression. I mean, in the sense that Saddam had invaded Kuwait and we were pushing him back. And so while we were going in there to stabilize the region, we asked the Saudis, this came out after the fact, to pump a little extra oil to keep markets stable, and they did so. I don't disagree with Larry in saying that. I want to add something else that may be added back. If you're bullish oil, if you're looking for reasons to be bullish oil, or if you're just cold and don't have your heating oil yet, if natural gas is up 7% because of weather, and crude has been down because of multiple reasons: stocks lower, oil lower, funds liquidating, Saudis pumping a little extra oil, you now might have the wind at your back. I would pay close attention to the key crack, which I can speak to, but I would rather let someone who watches it minute by minute and day by day speak to. But the heat crack should blow out. I'm not saying to buy heating oil. Buying crude oil is a more liquid play, but the heat crack may be blowing out if natural gas is up. I'll look at that later. Oil may be the buy right now domestically. You may see the Brent WTI spread narrow as well. I'm kind of in Larry's corner on the oil trade, and I'll be looking for a breakout today on my own system to get as an excuse to get long.
Well, that's definitely one area that's definitely in play that for the week will be very interesting to watch. We've seen some good volatility there. We're actually going to be speaking with Phil Flynn later on. He'll be talking about both natural gas and crude.
Are you going to be interviewing him?
Who, Phil?
Yeah.
Yeah, I'll be speaking with him.
Well, if you're going to be speaking with him, I would be interested to see if, without sounding conspiratorial, if he had a comment about did he see a pattern going into elections in past years where oil would probably stabilize? Because I remember when George W. Bush.
Yeah, that's a good question. I'll jot that one down.
Without being conspiratorial, I say this because I remember oil dropping, plummeting, as George W. Bush was speaking, running for re-election, and just saying, it was a coincidence at the time, but I know that we can either release our strategic petroleum reserves or we can ask the Saudis to pump up a little more. Remember, Aramco is U.S. technology with their oil. Anyway, it's a legitimate question to ask Phil without setting off alarms.
Sure. Obviously, like we just said, election, energy markets. The other big thing is the Fed. The Fed is on Thursday, and while zero is priced in, nobody's expecting them to raise rates. The key event of really the release will be, recently the Fed's meeting this week, and over the past 3, 4, 5 weeks, President Trump has been out there talking negatively about the Fed, saying, we wish that they wouldn't raise rates, and we don't think they're doing a good job, and this isn't what they should be doing. So this is their first chance to really meet since Trump has been public about those sort of talks. And keep in mind that it is expected, the market is priced in, I believe, a 78 or 82% chance right now of a December rate hike. So it'll be interesting to see. They're not expected to do anything on Thursday, but what the comments will be if they're basically still leaning towards a December hike, because they've been in the past. They've already raised rates 3 times this year, and before each one, it's been very well telegraphed. So it'll be interesting to see. And look, we just had a good non-farm, very steady non-farm payroll number. It was above 200,000. Average hourly earnings were pretty good. So from everything I see, nothing over the past few weeks from what they've been talking about, the signals that they're looking at, should be swaying them from hiking in January. That said, the only thing that could possibly sway them is been the volatility in the global markets. That said, that shouldn't be what they're looking at. That's not what they said that they've been looking at. So, and when it comes down to it, hey, I was just looking, S&P's up a few percent for the year. NASDAQ's up, over 5% for the year. So we've had some increased volatility, but it's still, an okay year right now.
Right. To add to that, Fed watchers, because I am a Fed watcher, be careful what you wish for. You now have a Fed president who pays attention to the numbers, meaning the economic numbers, not the stock numbers so much. So the Powell put is rumored to be 15% below unchanged, or 15% or 20% from the highs. So let's just pretend for the moment that there is no Powell put, that he's looking at the economics. And the economics are what they are, and the volatility will shake itself out. And I think you can rely on two things driving Powell. Number one, he's going to at least give the impression he's more interested in the economy than the stock market, which means people playing on uh, 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 semantics that you got out of Yellen and before that Bernanke, there'll be less semantics to play on. The second thing is, as long as Trump is berating the Fed, okay, and properly scapegoating them for his own political agenda, I think the Fed will continue to, let's face it, people are involved and people have egos. I think the Fed will continue. I think Powell will continue to assert independence. It's almost like telling the 4-year-old they can't have candy. Well, then they're going to want to have candy. So if Powell was going to lean towards raising rates based on the economy, not the stock market, he'll lean even further, especially if Trump is leaning into him. That might make his tenure a lot shorter than he hopes. But I think, like you said, Powell is more focused. You implied Powell is less focused on the short-term volatility and more focused on the long-term fundamentals.
Yeah, and look, when it comes down to it, the Fed is completely independent, and I think everybody in the Fed takes their job very seriously. And they probably don't appreciate the recent comments from the president. That said, I don't think that they're paying much attention to it. They're doing their job. They're doing what they've said that they're, laying out what they're doing. Personally, I think that the Fed has been more wrong than right over the past 20 years. That said, they kind of have their criteria of why they look to raise rates at certain times, and based on the criteria that they look at, inflation, unemployment, etc., the boxes are checked for further rate hikes. So I think that is going to be happening in December.
Agreed.
It's funny the different boxes that they have to check. I don't know. I mean,
or the dot plots.
Right. The dot plots. I think it's proven, and I think they're even saying it. There's no point to give 2-year, 3-year guidance because there's too much changes in the short term over 3 months.
That's such a good point. And actually, what I initially thought made Powell less reliable has made him more reliable. And by that I mean he came out and said, or one of his people said, we really don't know. I'm paraphrasing, but I may as well be quoting. But the dot plot has been the Fed's go-to indicator for the last 2 years, and Powell came out and said recently, we really don't know what the new normative rate is. Those weren't his words. He said natural interest rates or normal interest rates, and to say that after having had a Fed pursue that, what they believe the new normal was using the dot plot for 2 years is at first my reaction was idiot, meaning academic idiot, not idiot, but academic idiot. And then I saw his behavior after that, and I realized what he was doing, in my opinion, was he was saying the people before me who think that they know what normal is don't know what it is. Let's not say that we know what it is, but we'll know it when we see it. And immediately I had more of a respect for the guy, and for him to say, you could be speaking for him when you say, what's the use of looking 2 to 3 years down the road until we really know what normative is? And I like Powell, if for no other reason, he's going to be consistent with his behavior, I think. Anyway.
Yeah, well, I think the two key things for this week that are under the radar, everybody's been talking about the equity volatility, but the two key things for the week between the election and between the Fed is the fact that we have U.S. yields back towards the high of the year. Right now, the 10 years at 320, the 2 years at 291, and the 30 years at 344. If we get, I don't even say a hawkish Fed, but just a Fed on target for where they're going, and some other supportive data, the election not being potentially a huge event, because right now it seems like we're priced in for the House, for the Democrats, and the Senate for Republicans. So if we get that,
Right.
potentially there isn't a huge reaction. If we get yields to start to move up again, take another leg higher. I have a chart up right now of the euro, which is, the euro backed off a little bit, but we're still near the low of the year in the euro, and the dollar index is on the high of the year, within very short range of the high of the year. That could be the next big thing that shakes up the equity markets potentially, is the next leg higher in U.S. yields, the next leg higher in U.S. dollar.
Which brings me to the data I wanted to share. The debt markets, the U.S. debt, the world debt markets continue to be asked to absorb an increasing supply of government paper, especially the U.S. And this is during quantitative tightening. They issue their debt back out to lower their balance sheet, to reduce their balance sheet, and at the same time, they withdraw dollars from the world market. So an emerging market like Turkey, that just makes them choke. They have less dollars to pay back their dollar-denominated debt, even though there's more debt coming on the market. The weekly 3 and 6 month bill sales will be out today, and they will be raising 84 billion. So there are also 4, 8, and 52-week bill sales this week on top of the quarterly refunding that will raise another 83 billion. So you're going to have 3 years. So you're going to have 3 and 6 months. This may make you go to sleep hearing all this, but what I want you to take away from this is we're raising 83 billion this week in 3-year, 10-year notes and 30-year bonds, as well as 3 and 6 month bill sales. People who are really bond wonks and yield wonks will be looking at bids to cover and things like that. But the takeaway is there's a lot more debt coming on the market, and if you want to look for something that's a black swan, well, it's a brown swan because I just identified it. If the market has a hard time absorbing this debt, you could see yields go up and stocks go down at the same time. So to your point, yields will reassert themselves, I think, in the short term. By short term, I mean right after the election, as possibly the red herring or the unseen driver of markets outside of the elections. We have a lot more debt coming on the market, and I think it could be the only other surprise driver going into the elections that could drop us lower. So,
well, if you recall earlier on, the initial kind of volatility, that's what people were blaming it on. They're like, "Oh, the yields are starting to move."
right,
And to be, it wasn't a huge yield move actually when they, were starting to freak out about it. But
it
now,
wasn't.
in a way, I almost think of it as like a natural gas sort of thing here. Natural gas broke through $3 and then, got up to about 330, came back down to about 320 and paused there for a few weeks, and now it ripped higher. Yields did the same sort of thing, kind of took out that 3% level everybody was talking about, got up to 325, retraced back down to 315 or so with the volatility of the global markets. But we're at dangerous levels here. If we were to get, a slightly hawkish Fed, some election results that don't shake things up too much, maybe yields do start to move higher and really break out, and then that moves the dollar higher.
Which is the irony. I mean, think about the last move we had lower, and I think people that are looking at correlations, not on a minute by minute basis like many of us do, but who are looking for some sort of a framework to have a macro opinion, should heed what just happened when we had the sell off. As you said, I'm gonna say again because we have a lot of new listeners. Yields broke above 3%, right? The CEO of Opportunistic Trader and our basically head trader, Larry Benedict, was making noise about that. Apparently, the market didn't care at 3%, but at 3.25%, the market had a complete fit, and bonds sold off, stocks sold off, and then the dollar sold off. And when stocks sold off, that created a little bit of a bid under bonds, but it was hard to tell because bonds had been weakening anyway. So you saw different headlines after that. Global contagion comes to the U.S. That's one. QT really doing damage to the U.S. That's 2. Powell raising rates is killing the market. That's 3. How about 4? Interest rates were high enough to say to people, well, if I have a stock that's yielding 2% and I have a bond that's yielding 3%, I'll buy that. So I think, as you said, there doesn't seem to be a continuous liquidity of information as it's digested. At 2.99%, everything's okay. At 3%, everything's okay. But at 3.25%, it's like the market has stops going off. People are panicking. And the dollar, I think, has to go lower eventually, but it will continue to go higher as QT or stabilize and go higher as QT drains dollar liquidity off the market. I have a couple levels to share, I think, for
Yeah,
active
sure.
traders if they're looking at those. Why don't we start with? Why don't we start with? Well, we did precious metals. Nothing to brag about there. Um, start with oil, since actually let's start with natural gas, so we can just do that. Uh, Natural gas is 355, three. Okay, well, boy, we have another breakout here. On a monthly basis, this market is now a continual buy as long as it's above 320. It doesn't help you on an hourly or daily basis. But let me give you a thing on an hourly. On an hourly, we're overbought. I say this with low confidence. Overbought. I would be possibly looking for a retracement or a sell if we settle the next hour under 354, which is a penny away, basically, a couple pennies away. Crude, which is more interesting in terms of just breaking out on an hourly basis. I like being long front month futures crude as long as we're above 63.18, holding it for whatever your entry point is. Times how much you lose times 1.5. So let's say you're buying at 63.58, you're risking 40 cents. I would look for 80 cents on the upside. Crude is looking very promising today, and it looks like it's late to the party. By that I mean following natural gas, which means I think there might be a really good trade in there today. S&P, just throwing it out there. S&P, or I should say specifically the ES Mini. The ES Mini shows promise to be a buy if it settles over 27.25 spot 37 in the next hour, or below 27.11 spot 09 in the next hour. You could also use those numbers to fade if you're trading the range, but I like those numbers a lot in the S&P because on the 4-hour basis, I'm not saying we're going to get there, but above 2747 or below 2700, you'll have a continuation of whatever happens on the hourly. And please keep in mind, if you're a technician, I am not, but I'm not blind to what a gap is. If you're looking at not the ES, but the SPX or SPY, depending on where you like to put your decimals, there's a gap between 2700 and 2680. It looks like. I would be interested to see how the technicians, specifically Tracy, who looks at VWAPs and broken areas and areas that need work, how she feels about that. If we get into the gap today, is what I'm saying to listeners. If we get into the gap today in the S&P, be in the equity chat and start asking questions, because how it behaves in the gap, if it's on light volume or heavy volume, may give you a nice trade to do for a couple hours. The other thing that I would focus on today, as everyone always does properly, is the VIX. The VIX, beware if you want to trade it like Larry does, even though he doesn't articulate it this way. If the VIX is weak and the market is nowhere, that is, again, that is bullish. This is your thumbnail cheat sheet. If the VIX is strong and the market is nowhere, that is bearish. If the VIX is lower and the market is lower, or the VIX is not performing strongly and the market is lower, that can be perceived as bullish. I can take the other side of those and argue those all day long, but it's important to know that that should be your first reaction and see how it reacts. What we've seen in the VIX, what I have seen, and not minute by minute as Larry trades, but I have seen that the VIX will make new highs when the market makes new lows. So any retracement of a move lower, the VIX won't quite reach its previous highs of 29%. However, when the market is rallying, the VIX is not getting slammed as much as it used to. And that to me is a sign of either underhedged or people that are reticent to puke their hedges like they used to in the past, which means to me, post-election, you may have a bigger move in the VIX one way or the other than you will have in the stock market. That's all I have to offer. Hope that helps.
Yeah, thanks for that. similar, like you were saying, Larry does heavily look at the VIX. And, just a recap, Larry is on a plane. He's actually getting off probably as we speak. He's going to be on with us in about 45 minutes. And you can bet that after being on a plane for 2 or 3 hours, he's got a lot of thoughts ready to talk about the markets and the week ahead. So he's going to be with us, and he's going to be with us throughout the day. So that'll be interesting. So stay tuned for that. I don't have exact times for when he's going to be coming on, but he'll be coming on a few times today.
Do you think so? He'll have time to be actually on the on a chat with you, on an interview with you?
Absolutely.
Okay, good. That'd be great.
He's going to be coming on a few times audio wise, and I'd say definitely before 10:15 a.m. This morning he'll be coming on. And so just looking at the board, Apple is down $3.50 at 204. So that's interesting. I think we got to keep an eye on that. FANG stocks we got to keep an eye on. Facebook, Netflix. I'm sorry, it was Facebook, Amazon, and Google. President was talking about last night, so let's keep an eye on those.
That's right.
Financials, I want to see how those are trading throughout the day. We'll keep an eye on the dollar. I think. I'm just looking at, if you take a look at your upper left-hand chart, the mini S&P, let's recap Friday a little bit. Remember, Friday, we were trading lower in overnight session by a few points, and around midnight, there was a tweet out from Trump that they're getting ready. He's instructed the White House to kind of put together a deal with China. He thinks it's going to happen. S&P rallies about 35 points up to 2765. Then Kudlow and other people start leaking out that, I don't know what he's talking about. It's probably not going to be happening anytime soon. Don't get your hopes up. And S&P trades from 2765 down to about 20. I think we got just below 2700. We did. And then, rallied a bit back into the close. And, we haven't done a whole lot overnight. The range, especially given the recent volatility, is very, very small. Especially even over the last 2 hours, we've been in about a 5-point mini S&P range. So that's pretty tight. So right now we're trading 27.25. I think the main event for the week, especially at least the first one, is the elections coming up tomorrow. So people are going to be, talking about that, getting ready for that. And so I think that's what, I'll be talking to, whether it be Phil Flynn, Alan Hill, Larry, everybody about, is that sort of stuff. But, that's what we're looking at. Crude oil right now, 63.50. So, it's up $1 off the low on, we've gotten this Iranian, more news about that, so we'll keep an eye on that. Nat gas, huge mover, up 7.5%. We'll get a lot more flow and information on that. The schedule for the day, we have Phil Flynn going to be coming on 10 o'clock. We have Alan Hill coming on at 10:30. Then Larry's going to be coming on throughout the day. Then we have at 1:30, we have Adam Collins on the latest COT report and market seasonality. I have a few interesting questions for him on that. And once again, for anybody, if you have any questions for anybody, ask them in the chat, or you can email me privately, info@theopportunistictrader.com, and I can get those questions out to our speakers. But that's the schedule for the day. I think it'll be a pretty interesting day, pretty interesting week. Any last thoughts here, Vince?
I think yes. I think your comment about I forgot all about them, but yeah, the FANG stocks, the just even the potential of investigation or assessment of them as monopolies is going to weigh on them. And I'm looking at those. I have some pending signals, which I won't discuss right here because I want to see how the market opens. But I'll throw them in equity if I see them. Anyone who has questions about anything at all, although you have many people at your disposal to speak with, I strongly recommend you speak with Tom McEntee, just because I like to annoy him. But that's just all said and fun. Tom is really great. He knows his stuff, and that's why I ask him questions all the time. So we do have a report from Goldman Sachs on gold. We're putting that up in a minute. We're also probably going to get that thrown on Zero Hedge. Might be worth your while to take a look at it because it's not just about gold. If you're talking about gold, even if you don't want to talk about gold, you're implicitly talking about the stock market because you're talking about fear. Please look for that post. It just went up. And look forward to hearing from Larry when he's touched down safely and his rationale behind being long oil.
Well, I know his rationale being long oil. He's wanted to stick in this combination of the Iran sanctions and also post-election, really, and also just the fact that this is the way he kind of looks at things more times than not. He's looking to fade moves that are extreme in, let's say a 6-7 day period, and that's what he's done with that one.
That's nice. It's the first time I've heard that.
And a combination with he seeing the catalyst with the election coming up is just something as well that he probably
right. Well, he has that, and the window is back now. I think because the weather. What I would ask him to. I would just say keep an eye on the heat crack. If natural gas is up and cold weather's coming, on top of those reasons which are legitimate, they're taking their foot off of oil post the midterm election. You're also going to have weather on it. I'd be interested to see if he's focused on that as well. Okay.
Yeah. Well,
look forward to it.
That is the schedule for the day. We'll be active. Larry will be out there putting some trades out there, talking about oil, talking about the S&P. Let's have a good day. We'll talk to you guys soon.